Friday, the 2nd of September, and the band to the upside has been broken. The Fibonacci level has been broken for the second time. A higher low was placed after the previous hit. Now that we're getting above it, showing signs that the big selling from May is a failed move, this thing really has the potential to really get going. And the quarter day or the 6-hour chart is really getting going right now. It's been about almost 2 days, day and a half of this very tight range where the previous resistance mark of the 4132 was used as support rather than that of resistance while it was holding up within this band. It's not an 18 period, but it's a 20 period. The reason why it's 20 is because that makes the 5-day moving average. Therefore, after a nice consolidation pattern, it's now managed to get above it. So we know now that this is a failure. Now, how do we confirm a breakout for this to be a failure? Either one, a very large breakout, which in this case would be at least to around here, which is the case. Maybe it does something like this and then breaks free. It didn't do that, obviously. So therefore, the move is a failure, going from 43 to approximately 39. And now that that's the case, as I say, things can really pick up. And when we switch this to a longer term time frame, we will use the 3-day time frame for this. And today is the third and final day within this candle. And now it's trying to break out past this previous resistance point. But what's important is that it's making a pattern of higher highs as well as higher lows. So we have the lows in here, and then the highs, where it's stair-stepping its way towards the upside. And of course, as I've been mentioning, you had the big Fibonacci here, which was finally taken out a little while ago. Now the second one is obviously now getting by that level in here, showing that this entire move is that of a failure. And this major rally higher was not a failure because it came back down to this support level that not only says that it's still successful, but still says that the run is still bullish. Now, as far as this moving average, it's an 18-period average of 3 days. Therefore, it's about 54-period front-weighted moving average, therefore very close to that of a 50-day moving average. And I've been talking about this for what seems like an eternity now, and that is the potential of one of these failed moves bringing a fast move. And right now, it's looking as if this lower part here is the failed move. The fast move would be at least up to the 50, but even up towards 53 and 54. The upper band is currently only set at 50.28, but when we adjust this towards the weekly term time frame, we will see another pattern that really wants to get going, because after being on the lower end of this area here, finding resistance at the 18-period average of closes, it found it at support, and a few weeks ago at that, above it, and again breaking above this level, almost like this little cup formation showing the retracement. Now, a lot of times I like to refer to corrections like energy or mana used to create the moves that were needed. For the move that got us going last year, there was a lot of sideways consolidation, more that is even shown on this chart, as it spanned what seemed to be about a year and a half, and then boom, has a nice leg higher. Now within this energy that we have in here, once this thing gets ready to get going, watch out. Now as far as this upper band as well, it's a bit over 50, 51.87. As the markets move higher, what will happen normally is the volatility will increase just a little bit, but enough to make these bands start to move higher. For by the time this actually were to appear, let's assume next week is a massive week. Not saying it is. It is the holiday start week with Labor Day. I don't know offhand if the markets are even going to trade on Monday. I suppose I can check the LBMA webpage. However, once the holiday is done, then potentially that's when the things can start to occur. Now, always after Labor Day, things seem to always pick up. But is it the day after on the Tuesday? Is it the Monday the week after? Very difficult to point out. But again, a big move up here, like a candle of this type of size, would make this band increase within it because the 18-period average of highs would increase, the volatility would increase, thus the band would have no choice but to go higher as well. Now, as far as the volatility is concerned, there's no labels for what this is. If you've been watching my videos, you already know what this is. The top part represents how volatile a 6-hour period of silver happens to be. Simply by taking the highest point of a period, subtract the lowest, get the difference of the two and divide it by the lowest, that's what this is. And the blue line is a 5-day or 20-period average front weighted amongst the top part, and the orange is a 20-day or 80-period front weighted average. But the move that we're seeing, 2 moves this morning, has not really done much to change this. And here you can see it's starting to break out. But what would be ideal for a rally is medium volatility, which means higher than the normal stuff that we get on the lower end, but enough to make moves that bring us up towards maybe this 4% bar in here, but nothing that's going to bring us up towards here. I do think there's going to be one move that will take us well past this 10%, which will create much volatility on the before and after part within it that will be related to up moves. But normally when this thing gets out of control and this thing pops to the upside, that does mean retracements for the market. And when it's lower or not so high, then that's what can bring higher price action. And thank you for tuning in, and have yourself a great weekend. Bye-bye.